Hey guys, Mark Kuhn from Mak Capital here. Hey, I'm giving you a quick update here on about I got a few things that I want to update you on. I got the Angle, Thames Crossing, new deals within there. We're working a bunch of new deals to bring to you and try to report here, and we want to get some new offerings up on Groundbreaker, and then just talking a little bit about stock market versus real estate, just because that's always a hot topic. So let's start with the Angle. Here's a presentation. We had a meeting with Thief River Falls, a council meeting, asking for a pilot tax incentive. So I want to just kind of educate you guys quick on what the pilot and what we asked for there, and then how we're going to incorporate how that's going to help us cash flow, to different things like that. So it's a pilot tax incentive. And anyway, this is a presentation I did for council this Tuesday. So I'm just kind of going to show this to you. Basically, I showed them the project, the Angle. We added the daycare into this piece, which is huge because it differentiates us from just a multifamily complex. So this is, and really I think for asking for a pilot incentive, this is what differentiates our project, adding the daycare piece. They're both in super need in Thief River. So kind of asked here. So basically I told them what the Angle was: 93 units, 9,000 square feet of commercial space. The rest is garage space on the main floor. There's also a 10,000 square foot childcare facility. So with this childcare facility now up on the northern piece, the Angle's kind of over here. This helps direct traffic, keeps it out from the front of the multi-family space. And then we also, so we're going to house kids ages infant to preschool. I think that's important for Thief River. They're really short on infant space. And we're going to have flexible time rooms for the unique job shifts in Thief River Falls, because there's unique shifts within DigiKey, within Articat, and Sanford Health. So we're the closest to all the large employers that anyone is in the town. So kind of through here. Come on, puppy. So what is a pilot? It's a payment in lieu of tax, and it's commonly used in counties to help bring new development to their towns. The easiest definitions say basically this keeps it simple from maybe a TIF style abatement. It's just a delay in assessment. It's usually a 10-year agreement between us and the city, and it's kind of a step process, and I'll explain that. So by doing a pilot style, it's just a delay in the assessment. It's not necessarily changing the levies within the city. It's more of just or doing any kind of reimbursement. So this counting is just delaying the assessment of the property. So I'll explain how that works here next. So basically our request to the city was that right now the land value is worth $10,300. We pay about $250 a year in taxes. And basically at years 1 through 5, we're assessed at basically just that land value, just $10,300. And then at years 6 through 10, so the next 5 years, we go to 50% value of the true market value of the property. And then basically at year 10, it exhausts everything and we go to full tax evaluation. And why we asked for this, basically the project doesn't, if the property is assessed as full value year 1, it doesn't make financial sense. It doesn't give our investors, our returns. The new commercial tenants have pass-through CAM fees. It makes almost the CAM fees too much for the commercial tenants to get through their initial build-outs and their initial costs to get into this property. And then this project will not be developed but for a real estate tax incentive. Those are the key words when it comes to talking to cities. So I kind of gave them a chart here, what it looks like. Basically, if they were just to collect on their land, we didn't do anything, they're going to get $2,500 in taxes over the next 10 years. If we do the next, if we use in our abatement, $250 for the first 5 years, $106 for the following 5 years, so year 10, and then full year 11. So over that 10-year period, they're going to have $531,000. So basically, no matter what, they're going to have a $530,000 increase in taxable income, even with this abatement. So anyway, we're working with the city right now on trying to get this abatement in process. So we have to go to the county as well as the school board and pitch this in front of them as well. So a great project for Thief River. They're excited about it. They love the project. So we're going to keep hard work on this. It is going to delay things a little bit, but everything's been a delay anyway. So we're hoping to have some answers here in August, I guess, if we can get that abatement, and then hopefully get this thing right on the ground running. So we're a step closer on this project. So next I'm going to update you on Thames Crossing. The same night we had a council meeting for Thief River Falls. We had a neighborhood meeting for Thames Crossing. And the reason we had a neighborhood meeting is that we're increasing the density by a little bit in that area of town, having 16 units instead of 10 units on the deal. So basically I got a little slideshow to show you on what our timelines are. Hold on, I was going to show you that first. So this is our teams. There it is. Okay, so here's our timeline. We had the preliminary approval. We got preliminary approval. We had council approval. So then we have a neighborhood meeting. We just held that on 7/20. We were considered for final approval. So this is where we'll get initial approval from planning and zoning, and this is a big one for us. The council meeting, it should push right through. It's 2 8-plexes, no big deal in an area where there's density already. So this is kind of 8/4 is a big date for this project, and then we should be able to get initial permit hopefully late August. Engineering and planning already has it already in development. So let's rock to a investment model. I made a new investment model for Thames Crossing because I did add something. So you've kind of seen this. I'm going to kind of plow through here because you guys know some of this. So we did add, okay, we have our 2 8-plexes, 3-bed, 3 baths, and then we have some 2.5 baths. And then we added some existing units. So we had some existing units internal within Mak Properties, and I'm actually going to add them to this portfolio because it's all one smaller area, and I think it'll actually make the whole project, it makes the whole project just cash flow better. So it made sense to get these into Thames Crossing as well. It gets us up to 21 units total. And so I think if it benefits the project, I think that's this will be the best way to do this. So and these are cash flowing properties. So as we're building these, we're already going to have cash flowing properties that are under management. So, oh gosh, there we go. Thank you. Basically, you know where the 8-plexes are going, and the rest of those 5 properties are right in here as well. And I think there's a couple in here, a couple over here, and 1 in there. So. Kind of a location of where all those properties are at. Maybe you've seen the floor plans for the new 8-plexes. This is kind of the presentation we did for the city, and now they seem to be really on board. We did do some nice renderings for them. Really helps the city understand what we're doing. Doesn't want to go next. There you go. 5 existing properties. So 826 Thames Court, this is one of the existing units over there that we're pushing back into the deal. So this is townhome that's already leased, and I think we're getting $1,650 a month for that. And then we have 834 Thames Court. This is a 2-bed unit, all newer units, and most of them are baseboard heat, so they're very low to maintain. The cost, everything's maintenance free. Vinyl floorings, it's just very low maintenance, and then the tenants end up covering up the utilities and all the city stuff. So very, very low, very easy to maintain. And then we just have some 3-story units with attached heated garages on the first level, and then kind of the second level, and we have 2 units like that. And then we have 1002, which is an end unit. We get pretty good rent for that one as well. A little larger 3-bed unit. Really nice unit over there, so easy rental. We updated the sources and uses, so we have like a $3.78 million project. We're going to be fundraising probably about $1 million, and Coda Bank will be doing the financing on this one. So this one's cash on cash. It just keeps improving. Honestly, when I added those properties, we got to 9%. Really excited about that. So, you know, at year 5, we're already at 12%. There's some refi opportunities in here, depending upon what interest rates do. So, NOI's improved, and I updated all this stuff on to Groundbreaker. So please go check that out. You can get all this info on there. And if you have any questions or if you're interested in this property, please click the link on Groundbreaker or email me or Larissa. So keep going through. We have already built-in equity at what we're running this as, so we're building it cheaper than what we're appraising it for, so that's great. Kind of keep clicking through. Our DSR is basically the leverage on it, and we're 1.25 is the minimum. We're setting up at almost a 1.6 year 1, so just a really good cash flowing property, a really nice property for investors to get in on this one. So if we pass on 8.4, you're going to want to get into this one and fairly quickly, because I think it's going to fill up. So there's a few guys already chomping on this. So it's so keep an eye on this. Like I said, if you're interested, maybe email me even how much you're interested in getting in this one for. So all right, so we've talked about the angle. We're also running new deals right now in different markets, Sioux Falls to Fargo we've ran, and we've been looking a little bit into Bozeman. And anyway, we've been running about 10 deals a week on running performas. Definitely markets are tighter because people are asking so much, and people can because interest rates are so low, but we're keeping our eyes out. We're running a lot of deals. I think we're going to be coming up. We got a couple good ones, none that I'm going to upload yet to Groundbreaker, but keep your eye out. Those will be, I think we'll have something on the hook very soon. So again, with the stock market versus what real estate's going to offer you guys, talking with the stock market, I think there's a bumpy ride in the future. There's just so much growth in 2020. It's going to be hard to hit your whatever. I don't know. Most people hit 20 to 30% last year in their portfolios or 401ks, but you didn't get any tax benefit with that. You didn't get any cash flow. So I mean, I just want to reiterate the real estate. When you lock in $500,000 into a real estate project, you're also getting cash flow at 5, 6, 7, 8, 10%, whatever these properties are operating at, and how our agreement looks. So. And then also you're just, all you're doing while you're waiting for cash flow is that you're getting appreciation. So also your $500,000 is growing for appreciation while you're getting cash flow on top of the money. So that is one of the two biggest things you got to understand about real estate, and how we run these deals very conservatively. So we hope that they, smash it out of the ballpark. Maybe there's increase in rents. Value add deals, we're looking high into that because of course we do construction, we can do it efficiently and effectively. So the third biggest thing, tax advantages with real estate. It's you just can't get it anywhere else or any other platform. So so the tax incentives of real estate can knock out most of the cash flow that you're making from the property, which I know you can't do with your stocks. So we also have leverage. Basically $1 equals $4, right? Like in the stock market, it's 1 to 1. You got $1 in, you got $1 worth of stock. And where in real estate, we can leverage $1 in is equaling $4 in the real estate market, and you can get a low percentage. We can borrow at 3-4% right now. It's ridiculous. So why not use the bank's money and leverage it and have producing cash flow yourselves, and then you're getting a bigger exposure to more upside on a project like this. So I think our IRR on that Thames Crossing was 20 some odd plus percent, or when we exit the project. So again, I just want to give you guys a quick update. It was kind of a big week on the angle, big week on Thames Crossing projects. I'm hoping I can bring you a new one in the next couple of weeks. and maybe an existing deal. Just those are hard to get our hands on right now, but I appreciate you. Thanks.